The average Australian overpays tax every single year. Not because they're doing anything wrong, but because they don't know the rules are actually designed to let you keep more of your own money, if you know how to use them. Here's the mindset shift first. You don't need to earn less to pay less tax. You need to arrange your finances more strategically. That's it. That's the entire game. So let's go through the moves that actually work. Legally. Starting this financial year. Move number 1. The new $1,000 deduction. From July 2026, every Australian worker can claim up to $1,000 in work-related expenses without keeping a single receipt. Combined with the new tax offset, the average worker could save up to $205 just from this one change. For doing basically nothing except ticking a box at tax time. Move number 2. Superannuation. This is the one most people sleep on completely. Salary sacrificing into super means your employer pays part of your pre-tax salary straight into your fund, taxed at just 15% instead of your personal tax rate. At the top marginal rate, this can save a high-income earner up to $13,500 a year. Even if you're nowhere near that bracket, every dollar redirected this way is taxed lower than if it landed on your payslip first. Move number 3. Know your bracket. $0 to $18,200 is tax-free. $18,201 to $45,000 sits at 16%. $45,001 to $135,000 sits at 30%. $135,001 to $190,000 sits at 37%, and anything above that is taxed at 45%. Here's why this actually matters. Deductions are worth more the higher your bracket sits. A $1,000 deduction saves someone on 30% exactly $300. But it saves someone on 45% a full $450. Same deduction. Different value. Savings.com.au. Move number 4. If you're a higher income earner, discretionary trusts can legally distribute income to family members sitting on lower tax brackets, and bucket companies can cap the tax rate on distributed profits at 30% rather than your top personal rate. These need a proper accountant to set up correctly. But they are completely legal. And they're used constantly by people who actually understand how the system works. SBS. Now here's the warning that matters more than everything else in this video. There is a powerful anti-avoidance law in Australia called Part 1 VA, and it lets the tax office cancel any tax benefit if the sole or dominant purpose of a scheme was simply avoiding tax. Legal tax minimisation means using the rules exactly as they were intended. Tax evasion is a completely different thing. And it ends very, very differently. So here's your actual takeaway. None of this is a loophole. It's the system working exactly as it was designed to. Most people just never get taught any of it. Start with the $1,000 deduction this year. Then talk to a registered accountant about super and structure as your income grows. This is general information, not personal financial advice. Always check with a tax agent before acting on any of it.